Hi, people. Thank you for stopping by at Building Wealth with Rajeev. So far, I've been talking to long term investors. However, I saw some of my friends doing day trading. Somehow, I was not convinced about that. So I turned to Mike. Mike is a very successful trader and is a very good trading coach. He has recently authored a book on trading beliefs. According to Mike, he has made all the possible mistakes a trader can make. My happiness multiplied when a fellow investor, Dinesh, joined me in talking to Mike. We asked Mike, is trading for everybody?
It's for anyone that's willing to put in the work. Uh, Most people, when they approach the market, most of them approach it with the mindset that I did back in the late 90s, that it's easy. You put money in, you wait X amount of time, and you get more money out. Uh, you could click a few buttons. Hell, now you've got your cell phone. You could just go and trade from anywhere and have yachts and have Ferraris and
Hmm.
Lamborghinis,
Hmm.
mansions, and all
Hmm.
this.
Hmm.
And it's not like that at all. I would say that it's more akin to becoming a doctor or a lawyer. Like you wouldn't just say that, okay, like I want to be a doctor. Like hand me a knife and I'm going to start doing surgery. Like it doesn't quite work like that. Like there's a whole learning process. So understanding what people are getting themselves into is an important part of the game. Another thing that I would say too is that in order for a system to work for you, it needs to align with your beliefs, it needs to align with your goals, and it has to be something that you can execute well. If any one of those three are missing, it's not going to work. Most people don't have a full awareness of what their beliefs are, and some people might hear a statement like that and get offended by it. But for most part, our beliefs are running in our subconscious mind. Like if we were fully aware of everything at every time, your head would explode. So it takes it's beneficial to figure out and question, well, what are my trading beliefs? What beliefs do I have about money? Those two are so closely related that if, let's say you study trading and you have great beliefs about trading, you've gone through some great courses, and you haven't dug into your money beliefs and you feel that money is limited, it's hard to come by, you have to work hard for money, then it's going to manifest in your trading, because if trades start to run and you see your P&L going up, your equity is going in the right direction, but money is scarce, are you going to be in a position to allow your trade to run? Most people end up tripping over that again and again and wondering why. It could be tied to a money belief, but the only way to know for sure is to do an exercise where you're becoming aware of your beliefs, and then you could start to see, well, is this belief bringing me closer to, or is it bringing me further away from my goals? And that's how you could start to reprogram the system, the mindset. Um,
But
yeah,
it's a lot of hard work, no? I mean,
it is. It is. I think that it's a worthy goal. I think that it's completely worth it for anybody that wants to pursue it. Definitely.
so I give you
Yeah,
an
that's
example. I give you an example, Mike. Take my
yeah, yeah.
example. Take my example. I have this ambition to be, let's say, financially free. Let's start with this.
Okay,
That's number one. But at the same time, I'm a fairly emotional person,
okay.
and but I do want a regular stream of income, and I
Mhm.
think maybe trading can help me. What's my next step?
Okay. Well, I would. Uh, Here's another thing too. Many traders trade with the idea that trading is going to be the full-time income, and I'm just going to trade, and that's it. And uh, if you're starting from that place, then the focus tends to be on making money rather than acquiring skills. if you want to be financially free and you want trading to be that avenue, focus on the skill building first. Focus on building your capital, right? Because the trading is going to take a while to learn. So as you're learning, keep on putting money away. Keep on putting money away. There's a fantastic book that I just read that Jason Greystone actually turned me on to. If you don't know who he is, definitely go check him out too. We're doing this this summit, this Trader Vault summit. It's coming up towards the end of April, and the book that he recommended was this book called The Richest Man in Babylon. It's
Oh
a
yeah, no,
classic.
I've read this book. I've read this book, and it's an amazing book.
Yeah, absolutely. And so 10%, right? Like
Yeah, yeah,
pay
yeah.
yourself 10%, keep sucking that away, sucking that away, sucking
Pay,
that away. And that's
pay yourself first, something like that, right? You have to pay yourself first. That's the first thing you have to do.
yes.
Yeah.
Yes, so continue to do that. And then while you're doing that, begin acquiring the skills. Learn what the skills that you need to be a trader are. Most people think that it's about analyzing stocks and or Forex or crypto or whatever it is that you want, whatever asset class, and that's it. There's a lot more to this game. You have to learn about trade management. You have to learn about portfolio management, position sizing. I would also suggest learning about back testing, journaling, post-analysis, and mindset. 8 core skills that are really necessary for somebody that wants to be a financial trader and for this to be a primary thing. But build up the capital first, so that way you're not just reliant on trading to eat and keep the roof over your head. Then that's putting a lot of stress on it. If you've already built up your savings and you're trading not with the whole thing, but with this much of it, and you have that capital, then you're able to allow that capital to work and for the trading systems that you've studied to do its thing without the fear of, oh my God, this trade is going against me. I'm going to be kicked out of my house, and the repo man's coming to take my car. Right? Like, we don't want that. So one way to do it is to build up that capital. Don't trade with all of it, and then trade
Yeah.
well with
Can
money
I?
that you're able to put at risk.
I'm itching to ask a question.
Yeah, sure, absolutely.
Um, Mike, tell me what do you consider as distraction in trading? And so I have two questions. Do you hedge first of all? And yes, then what is your typical philosophy of hedging? Uh, and the second is, in a trading mindset, what do you consider as distraction? For example, for me, the distraction could be I get swayed away with a 15%, 20% upswing, and I try to book profits at time, even though I have very strong conviction in the fundamentals of the company, which can give you a growth. But that 15% is a distraction for me. So I try to, as much as I try, sometimes I get distracted. What do you think is the biggest distraction which every trader should be mindful of, or consciously try not to, indulge in that?
Yeah, I'm glad that you brought that up. That's a common problem for a lot of people. I encountered that plenty myself in my journey. I would define a distraction as being anything that's outside of your trading plan. Anything that's outside of your trading plan. So, well, what does that mean? That means that if you do not have a clear trading plan, then everything is a distraction, right? So the first thing that we want to do is come up with a trading plan and define for ourselves what's going to be a part of that plan. I spoke a little bit earlier about my whole methodology and how I go about executing that. Anything that's outside of that is a distraction. Yeah, here's an example of a distraction that every once in a while I'll catch myself and I need to stop myself from doing. There's some traders that I follow that I hold in extremely high regard, like even to this day, right? I've been trading for 22 years now. There's other traders that I'm friends with that have been mentors to me in the past that I hold in still extremely high regard. And if they tweet something or say something that is contradictory to what my point of view is. My default was to start to second guess myself, and now I'm at the point where like I'm not second guessing myself, but I still need to catch myself because I respect them so much that I need to remind myself to respect myself and to respect my plans, because if I start to deviate from my plans, then I'm disrespecting myself, I'm disrespecting the work that I put in, I'm disrespecting the plan and the process. And if I start to deviate from the plan, then I'm not able to. And when I go back to do my post analysis, well, which again is a critical skill for all traders, because that's what's going to allow us to get better. When we do our post analysis, then let's say we exited a trade because somebody else said that it was wrong. We started to doubt ourselves. Then when we're go back to review the trade, we don't know if the plan was a good plan, if it would have worked out well or not, because we took it and tossed it out the window. So anything that's not in the trading plan, I consider to be noise and to be a distraction. Your other question about hedging and how do I hedge and do I hedge? The answer is yes, sparingly. Well, when the situation calls for it. So a recent example, about a month ago, before the Nasdaq and the indexes were coming in, or what was that, like the first week of March, like, or the last week of February, when we started to come in and close below the 10-week line, I still had stocks that were performing very well. In fact, I'm trying to remember the positions. There were a few banking stocks that looked well and that were holding up, but the market was starting to roll over, and I started to see weakness in some other areas. So one way that I wanted to hedge my account was to start buying some of the inverse ETFs, like SQQQ, like SDS. So that way, in case if the market did roll over, my account wouldn't roll over with it. Like it would still be hedged to be able to hold the positions that I had. That's one way that I like to hedge. It's not that I'm very selective with my timing of hedging, and often I'll just I have multiple ways to exit a trade, and I'll utilize those for trade management. So like using trailing stops, using what I call a backstop, I'll use those.
Nice. Look, uh, what's interesting is, Mike, you talked about your trading frame. It's like, what, 1 to 3 months?
Yes, yes. Most of my winners tend to be held for 1 to 3 months.
And what's the, like, is there a particular rationale behind that time
Just how
period
it
of one
works
to three?
out. Yeah, it's not where like 1 month comes and I start selling because of that. No, it's just how it works out with. So the consolidations that I'm trading tend to be about 4 to 8 weeks long, right? Like, so if there's
Mm-hmm.
a sideways consolidation, and there's different names for all these patterns and stuff, but uh, typically if it's moving the 4 to 8 weeks and then you buy that breakout, and I'm looking for a move out, let's say the stock breaks out, it was trading at 100 and I'm looking for it to run to 120. Generally speaking, it takes about 4 weeks or so for it to get to that point. Let's say that it gets to that 120 mark. All right, fine. So what I'm going to do at that first profit target, I'm going to take half my position off. The reason why is because I want to still give it room to run, right? Like that, the initial 20% could turn into 30, could turn into 40, but I want to take half off and allow the other half to run. So that way, if it does roll over, then thank God I sold something. If it continues to run, then thank God I held on to something. And that was a great lesson that my mentor, Mark Minervini, taught me. After I take my profit target, then I'm following it with moving average trail. So I'll follow it up with the 5 EMA, with the 10 EMA, and with the 21 EMA. If an exceptionally strong trade is going to hold its 21-day exponential moving average for a very long period of time, that was one of the things that John Boyd talked about in his book Monster Stocks. And Jim Ropel, who like super blessed to be able to call that guy a friend. I've had him on my show like a bunch of times already, and that's one of the things that he looks at too. Success leaves clues.
What does a typical day in Mike's trading day look like?
A typical day. So, my trading week actually starts on the weekend. I'm doing the whole weekend prep. We do a deep dive where what we spoke about at the beginning of the call, looking at the major indexes, seeing like which way are they moving across time frames. I do a multi-time frame analysis, so monthly, weekly, and daily. I like to think of it as seasons, right? Like so, let's say you walk to the local park and you looked at the trees, right? Like you could tell what season you're in by looking at the trees. At least here, I don't know how the seasons are in your part of the world, but in New York we have we have snow in the winter and it's hot in the summer, and you could tell like if there's snow on the ground and the leaves are off the trees, then clearly you're in winter. You could do the same thing with the market, but if you're waiting for there to be snow on the ground and no leaves on the trees, you're going to be late to the party. So you want to have a way where you are looking at the subtler signs of change, right? So you could start to see it on one tree, or you could also start to see like leaves on the ground. And I would say that that's close to being like the monthly, the weekly, and the daily time frames. The first signs of change are going to be on the daily time frames. Then you'll start to get confirmation on the weekly time frames, and you'll see the broader trend on the monthlies. And so we're doing that kind of stuff and everything else that I mentioned earlier on the weekend. And then I'm doing a mini version of that every single day at the end of the day. So end of the day, like my preparation is doing that, major indexes, seeing what kind of stocks are setting up, how the stocks in my own portfolio, how they're moving. That's a major tell, right? Like if we are focused and we're only trading the best of the best ideas, well, if the best of the best ideas are getting slammed, then the market is giving us some good information there. So doing that kind of preparation in the evening, and then in the morning before the market opens, what I'm doing before I open up anything else, I'm looking at what I wrote the night before, because that's going to put me in the mindset of when the market was closed and when it was calm and I did like a thorough analysis, and preparing that way. So that way, when I open things up and let's say the market is gapping down, it's not, oh my God, what do I do now? And it's not a scramble. I'm coming in with a plan, right? Like it's just like if you were drawing up a battle plan to go to war, you draw it up when things are calm and you're cool and collected, and then like before you go onto the battlefield, you review the plan, and then you know exactly what to do, how to do it, why to do it, and then the trading day is just execute, and that's it.
So I'm getting a lot of my answers the way we are hearing you. I'm getting my answers why so many people fail in trading, because it's so much of hard work. People think it's quick money. They
Yeah,
just wake up
it
one
is.
morning. No, it's all right. Carry on, Mike. Yeah. So it's like, oh, today bull market is up. I'm gonna buy stock A, stock B, stock C. Goes $5 up, sell it, come back, and when the bear market comes, there you go. You're bleeding. So looking at you, it's so much of hard work, so much of planning involved there, and it's a different ballgame altogether.
And that's a process that I found that works for me. Like, am I suggesting that my process is the only process that works? No, like there's plenty of people that have traded and have done exceptionally well, and so find out what works and what works for you, but to not just look at a trader that's had success and just try to copy them. Understand the why. Like, why do they do what they do? And that's how you'll start to say that, oh, okay, like, so I can start to do what they're doing and apply it in this way for me. Like, that's actually what helped me finally turn the corner, right? Like, because back to the story earlier from first finding O'Neill, like I read How to Make Money in Stocks. I read it a dozen times and I couldn't get it to work. Then I finally found the IBD meetup group, in New York City. And when I finally found those guys, it was being run by a couple of full-time traders, a hedge fund manager, and lots of people, the full gamut, right? Like beginners like me and other people in there. I started to see that, oh, that guy's doing can slim, but he's doing it in a slightly different way. This person's doing it in that way. And then that's like, oh, you could kind of make this your own, right? Like it's not a cookbook per se, like model success, don't try to be a clone of it. That's when the wheels started to turn. And then within a year, I found my own success and was invited to be a leader in that group.
So it's like a lot of try and error, realizing what you are, and then try to get that match in the personality with the style, and it's a process which we have followed through. I think we all have. I think I'm more of a long-term investor, Mike, with a time horizon of 3 to 5 or maybe more. So I think I'm trying to find my kind of style accordingly as well. Now, one thing which appeals to me, or what question comes to mind, Mike, is that. Uh, Everybody has a different style, but there are certain
Mhm.
principles to succeed for sure. I think that probably
Mhm.
you coach on that, and your book is also talks about some of the there are some classics which run across the personalities, which run across any time period. What are those
Mhm.
qualities for a trader you teach, or what do you think are important to be successful?
I think that there's the 8 core skills that everybody needs to learn. To review, trade analysis is going to be part of it, right? And it'll be for the individual to define, to clearly define, and so by clear definition, I mean like actually like take a pen and paper and write it out or type it up, but clearly define, well, what you're going to look at, right? And then that everything else becomes noise, right? That's how you're able to look at just like the 0.1% of information that's out there, and everything else is a waste of time. Everything else becomes a distraction. So your trade analysis, that's skill number one. Skill number two, again, it's going to be trade management. What kind of rules are you going to have to define your entry point, your exit point, where and how you're going to cut stop losses, and how you're going to manage a trade throughout? Then three is going to be the portfolio management. How
Mhm.
many trades do you want to have on at any one time? What happens if every single trade that you are holding right now goes against you? How much are you going to be out? What happens if every single stock that you're holding gaps down against you? What's your maximum risk? If you know these things ahead of time, then you won't be caught off guard should they happen. Yes, it's very unlikely that every single stock that you have will gap against you, but black swans do exist, and you need to, if you have an awareness of it, you won't be caught off guard when it happens. And if you also know the probability of that happening, like so every stock coming in against you, or even worse, like gapping against you, if you know that it's a small probability, it will help provide you with the ability to hold through, like, oh, there's some weakness in this, but it's that my plan is to continue with this and not to sell at this point. Great. Because you've generated awareness, you've gone through, you've written it out, you've had a plan, it makes you that much more capable of sitting through and allowing the plan to work. So portfolio management, your position sizing, how much you're going to risk per idea, right? I like to use a percentage of capital. I only put 1% of my capital at risk per trade on a standard average trade, right? Like sometimes it'll be a little bit more when the market is hot. Sometimes it'll be less. Like, well, when we're in a choppy environment like this, I'm scaling down to only risking 0.5% per idea. Sometimes even less than that, right? Like I want to be trading my best when or my biggest when I'm trading my best when trades are working, and I want to be trading my smallest when things are not working. So position sizing, having position sizing strategy. Then fifth, and this was the one that I neglected for so long, was back testing. How do you know that something's actually going to work? And I think that that's one that people just hear a tip get a stock alert and say, okay, well, that person's doing it, so I'm going to do it, then the trade starts to move against you and you don't have confidence in it because you don't know if it works or not. And maybe you've read some books and so you think that you know, but you haven't actually done the work to test it out, right? Like it's like if you were to become a mechanic and you read a couple of books on being a mechanic and you have that knowledge, but you haven't worked on a car yet. Are you going to be a successful mechanic right off the bat? No, like you need to get your hands dirty. Same thing, backtesting is a great way to do it where you're not putting your own money at risk.
It's the basic thing, the conviction. How do you get the conviction? I mean, whether you're an investor or a trader, there are certain ways you get conviction, which by studying the stocks, by studying the history, and that's where, Mike, you're coming from. Dinesh, you have any question? I think I just wanted to know, Mike, what kind of a return do you target a year? Is that do you have some you keep yourself the benchmark that I want to do this?
Yeah, like keeping track of your statistics is very important. So knowing, like annual returns, people love to look at that, right? Like, so, and to keep it per account. If you have, let's say that somebody's listening and they're a little bit more experienced, like segregate your statistics. So how do you do in stocks? How do you do in crypto? How do you do in long-term? How do you do in swing trades? Like whatever it is, like keep statistics on that. You could keep it in a spreadsheet. You could get journaling software. Like last year, I was up about 150% in one account, about 200% in the crypto account. Some of our members were outstanding years, right? Like some of the members were up 500%. One of the members last year, and so it's not about just following. So like, right? So that person that generated that return, if he was just doing like trying to be a Mike clone, he wouldn't have he would have had like half, right? Like less than half the return that he ended up having. But by understanding the principles and taking it for himself and applying it, like this guy was able to have incredible success. So yes, understanding your statistics is important. So beyond your annual return, another thing to know, well, what's your average holding time, both for winners and for losers? What's your average win size? What's the average loss size? What's the biggest winner? What's the biggest loser? And well, when you start to have an idea of some of those, and there's more stats, when you have an idea of those, you're not going to be caught off guard if you're in a drawdown. Like, so if you know that, oh, like I've had a drawdown where I've had like maybe 5 or 10 losing trades in a row, like it's not like, oh my God, I've lost 7 trades in a row and I suck and I'm terrible and let me go find some other way to trade. Maybe that's normal, but the only way that you're going to know is if you are journaling and keeping track of your statistics.
Do you want to talk about a losing trade where, which gave you a lot of lessons, the trading lessons, which was like highlight in a bad
sure. The
way.
biggest one that comes to that comes to mind was for my it was in silver and it happened right when I was getting married, right? Mm-hmm. So my wife and I are going to celebrate our 10-year wedding anniversary on April 30th, about a month and
awesome.
a week away. Yeah, thank you. So back then, so now we're going back to 2011. I had started to gain some consistency. My ego was starting to get a little bit big, and I'm like, wow, everything I touch is turning to gold. All right, I got into silver, and if you look at the chart of silver, SLV, in March and early April, like you'll see like it's doing this parabolic move, right? So like I got in like just as it was breaking out. It's like, yeah, this is amazing. Wedding day rolls around. I'm up about 80% or so on that trade. And it's just like, yeah, this is great. It's going to pay for the honeymoon. Yeah, it was amazing. So we go on the honeymoon. I come back and I check my account and my 80% gain had turned into an 8% gain. I had forgotten to set a stop loss. And that was a very important lesson. When you are going on vacation, make sure that and double check, triple check that your plan is in place. Your stops are in place if you're setting a stop. If you plan on selling everything, that it's sold, whatever your plan is going to be, double and triple check that plan and make sure that you have a plan in place before you are going to step away.
So that's the kind of a mistake you remember, the one of the biggest mistakes you've had so far.
That's one that sticks with you.
Okay, and what is the on the other side, like what is the gain which sticks with you, like where you have made something which you're proud of, a move which you anticipated or which you thought through well and came out to be true?
Um, I'll give you two. So the first one, last year, well, with Bitcoin, when it started to rally in December, that was a great trade for us. So we traded it three separate times, like as it consolidated, broke out. On the day of the breakout, like it was up like maybe about 5-7%, and then trading it three times as it consolidated and then broke out again, and then consolidated, and then broke out again. That was a great trade that ended up generating over 200% in 3-4 months. The other one wasn't an individual trade, but it was a series of trades. So a couple of years ago, I had this a very small account with Robinhood that I would just like treat as a testing ground, right? And I was trying to test out different option strategies like spreads and iron condors and butterflies, all these exotic animals that they have with options trading, and it didn't go well. In fact, I had a drawdown of that in that account of about 80%. That's just like, okay, that what I'm trying to do here clearly is not working. So then I started to apply my swing trading strategy as a day trading strategy. Same kind of setups you could still find on the same patterns, right? Like the same patterns, just like a multi-time frame analysis, trading in the direction of the overall market on the intraday time frame. So 5-minute charts, 15 minutes, an hour, like just trading out with that trend and to trade options, day trading options with that. I was able to generate, and I kid you not, and I put a video on YouTube about this, so go check that out. That has the screenshots. I was able to generate about a 12,000% return, and I think it was about 9 months, like day trading options in that way. But the
That's
amount in the
monstrous.
portfolio, what was that?
That's monstrous. I mean,
It's
that's
like
huge. That's
it's
super
freaking
huge.
ridiculous. Like I was looking like, is that right? Right? Because that doesn't seem real. But like I double checked it and yeah, like that's what it was. And the amount in the account, well, it was still small, right? So like even like with that large of return, like it's not like life-changing money. But the thing that I appreciated more from that wasn't the nice return like that's great, but it was digging out of a hole, digging out of a deep hole. And 80% drawdown is difficult to come back from. I was able to do that, and I was able to do that with a very small account that was subject to the PDT rule, pattern day trading rule, where you can't make more than 3 day trades in a week. Able to take that count and generate that kind of return with it like that was that's something that I'm proud of.
That's awesome. That's fantastic. Dinesh, you have any more questions for Mike?
It's been fascinating, Mike. I've learned a lot more about the psyche of a trader, and I think just to end with that, I have one last question.
Sure.
How do you maintain your mental health in such an intense, highly volatile, choppy markets? I know you've groomed. I mean, 22 years of experience is huge, but were there times, difficult times, and how did you really cope with the let's say those depressing moments that you might have had in your times?
Now that's an
Foreigner.
excellent question. I love that. So it starts with the daily routine. What types of things do we do for our own self-improvement? I've been meditating for several years now. I have a daily meditation practice, and it's changed a little bit over the years. Like I started with this app called Headspace, fantastic meditation app. It does guided meditation, and you could set it for 5 minutes if you're brand new to meditation. If you're the experienced and you want to do longer, you could do 10, you could do 20 minutes, you could do an hour with it if you want, guided or not. After using that app for a few years, I went to this workshop that Tony Robbins has called Unleash the Power Within.
Oh, yeah.
And he does a whole morning meditation where he calls it priming, and it's like this heavy breathing where you're moving your arms up and down and you're thinking about different things. I was doing that for a while. And then most recently, within the past, I'd say maybe about 6 months or so, I've gone back to Headspace where it's more of watching thoughts and focus. So I do that in the morning. I start my morning with that, and I try to do one in the afternoon. So another meditation, 10 minutes to 20 minutes in the afternoon. So I'm meditating twice a day. If it's good enough for Ray Dalio, it's good enough for me. Let's see, what else? Physical health. Physical health is important. I go to the gym multiple times a week. Like, it doesn't necessarily have to be going to the gym. Like, if you have a yoga practice, yoga is fantastic. If you are simply walking around outside, physical exercise, I think, is important to help clear the mind as well. And like, if you are feeling stressed, particularly in a trade, I would say to step away from it. Step away, take a little bit of time off from that trade, right? Like, presuming that you have your plan in place. If you are overly stressed out, you don't have a plan, you might be better off just exiting the trade, right? Like, and then of course, like, seeing the trade go up without you, that might be frustrating. But the mental capital is even more important than the physical capital that you may have made. So exit the trade if you don't have a plan, and then refocus. Right, like you can do the meditations, going out for a walk, or whatever it is, and then coming back with a set of fresh eyes to see what went right, what went wrong, and starting to assess.
We're thankful to you for giving us time, Mike. And we know your time is valuable, but you came on just on one request. We're really grateful, and I think it's the beginning of journey with you. We learned so much. Dinesh, what do you want to say to Mike?
No, we started off by asking the quote on your T-shirt. Wealth is a journey, and it is indeed. We learned a lot, and your trading style, your mindset, your psyche, and what goes into making a monstrous and successful trader. So thank you so much for spending time with us.
My pleasure. Yes, and anybody that's willing to put in the time and the effort and knows what they're getting themselves into can absolutely do this. Persevere, know what you're getting yourself into, get other people around you, listen to great educators like Rajeev and Dinesh right here on the show, and yeah, you're going to get a ton of value.
Hi people, I hope you enjoyed the interview. Personally, I'm more than convinced that trading requires some serious skills. There is no easy money out there, and wealth is a journey. I will leave you on to that. And now, if you like the content, please subscribe to the channel, press the bell icon. We'll chat soon. In the meantime, keep building, keep hustling, and keep smiling.